Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to look at how to use the DPs on the higher time frame charts to help enhance your trading. But as usual, let's start with the risk disclaimer. Remind you that all examples of these videos should be considered as hypothetical. No trades are actually taken. They're just shown for training and illustration purposes only. Also remind you there's a risk of loss in trading and investing. Or put another way, all professional traders know and accept and more importantly understand, or I should say understand and more importantly accept, that losses can and will and do unfold. In fact, we'll be looking at some losing trades a bit later in the video. And then all trade decisions are your own sole responsibility. Right, let's have a look at some charts. So today I'd like to have a look at the BankNifty over there in India and show you a great example from yesterday, which was November the 8th. You can see in MTPredictor we have automatic setups. You can see they're on the charts here, labeled on the charts, and we have a trend indicator where blue is up, grey or black is flat or in the process of changing, and red is down. So what we don't want to do is just purely and simply follow the chart with our MTP trend. Why? Because markets go in cycles. We talk a lot about this at MTPredictor. Anyone who's been in the markets for a while will know that basically about half the time they are pretty much random. You can't really get any kind of sensible analysis, and then about half the time you can get some good patterns in which you can get some trade setups. So half the time you shouldn't be trading at all. So what we do is we look to the higher time frame chart and see whether we can get any good and obvious support and resistance zones that are working well, and then use those to then gauge our trading on the lower time frame chart. For this we go to the higher time frame chart to start with. So what I want to do is go out to the 15-minute chart. The higher time frame is normally between 3 and 5 time frames higher. So if you're trading a 3-minute chart as we were here, you'd go out to the 15-minute chart. If you're trading, say, a 15-minute forex, you'd go out to the hourly. If you're trading, say, daily charts, you'd go out to the weekly. So I want to have a look at yesterday, which is the 8th of November. It's this day here. So the day started by declining down. It went down into this low here, which actually was, if I right mouse click and place the Elliott waves on, you can see it was the end of a 5-wave sequence. After this, we assume that the market's then going to go to the DP from the prior wave 4. So we go back to the prior wave 4, right mouse click, place decision point on. This was also the last swing into the low. So if I clear everything off, the last swing into that low there was this pivot. This is the one we use for our DP resistance to start with. As you can see, the market went up to that level, made a reversal, and then started to decline down. It carried on declining down into, if I place the DP off this low here, into the DP support zone there. But remember, these DPs are on the chart in advance. So if I clear this all off and I use our training mode to jump back to here, you can see that you right mouse click, you'd have this level on your chart in advance. So even before the market even got there, you'd knew that this was an area of potential resistance. So as you step forward, you knew that the market was then coming up into that level to then do resistance. As it started to come down, you could then place the DP off this low here. And as you see, again, it's on the chart in advance. That's the beauty of these. They're leading indicators. So you knew before you even got there that the large trend was down. And as you can see, that now the low of the day perfectly for you. Just turn trading mode off. Just wait till that reloads. So how do you use this on the shorter time frame? Well, now if we go down to the shorter time frame, which is the 3-minute, what we do is look for the market to be reacting at these higher time frame support and resistance zones, and then we look to take trades that are in the direction of that larger degree trend. So as you can see here, the market was rallying up. It reached that DP resistance there. You can see this says 15-minute up at this level here. So up into that high, the larger degree trend would be up. This is also gauged by the MTP trend indicators, therefore you wouldn't be taking that VS setup. After it made a high here, the market was then in a largely downtrend. Again, the MTP trend was red, so that helped you define that it was down. But can you see how the market is going down? So you would be avoiding these buy setups. But then suddenly you had a VS sell here. But can you see how this VS sell was in the direction of the largely trend coming off this higher time frame resistance that we had on the chart earlier in the day? So this would be a good trade setup to take. Right mouse, click over the red sell bar, do analysis. Remember, we use correct position sizing to vary the number of lots, contracts or shares to keep your initial risk small and under control. in this case less than 2% of 100,000 rupee account. Now there was the first target. That would have been a nice trade. It would have been 3.5R, or the profit would have been approximately 3.5 times the initial risk. That's what we like, is that when losses are small, when losses come through, they're kept small, but when profits come through, they're larger than losses. But for the more experienced trader, remember what I did is that I had this DP support zone on the chart in advance. In other words, this was here before the market even got down there. So what you could have done is, rather than saying, well, actually I want to come out at this level here, grab, drag, and say, well, actually I want to aim for the higher time frame support zone, because that's the larger degree area of where the market is anticipated to make a reversal. So rather than coming out at this first target, you could have then gone down to this next target here, and as you can see, that would have increased the profit to almost 8R, 8 times the initial risk. These are the kind of trade setups you're looking for, where the profits are large in relation to the initial risks. But do you see how this wasn't just a random kind of, well, let's make it a bit bigger? It was using the higher time frame support zone that you had on the chart in advance to use that as a target for the market to go down to. And as you can see, that did nail the low of the day really nicely. So that would have been a very nice profitable trade there. Of course, not all days are profitable, because here we can see that this actually caught the low very nicely. So the market now would be rallying up. It would be rallying up where? Well, let's go out to the higher time frame chart again. Let's place the DP off this high here. This would be our logical target for a rally going up. Well, actually no, sorry, that wouldn't have been on the chart already. As the market is rallying up here, we'd go back to this previous high. This high here would have been the last swing into the low. I'll just get rid of that one so we don't get confused by it. This is the last swing into the low. This would be the area of where potential resistance would be anticipated, so the larger trend would be up for today. But if we go to the 3-minute chart for today, which is the 9th of November, just wait till this loads, you can see that we did have some buy setups here. The first of which was gauged by this history triangle. So for this, we can actually right mouse click over the blue bar, do analysis, and as you can see, that would have placed the trade setup on at the time. This would have been a losing trade. Remember at the start of the video I said losses can and will and do unfold. So this would have been a losing trade, because at the time it looked like we were coming off nice support, and it looked like the resistance area was still quite a way off. So this looked like it was going to be a good trade, but it would have been taken in and stopped out. So this would have been kept into a losing trade. The loss would have been kept small at -1R. There was actually another trade set up here, came in, right mouse click over the blue buy bar. Again, the market went up slightly, took you in, and would have actually stopped you out a little bit later. If you hadn't have used your 100% initial risk level to bring your stock to break even, again, this would have been a losing trade. Remember, losses can and will and do unfold. This is all part of trading. But can you see how today, so far, you'd have had 2 losing trades, but they would have been kept small at 1R or -1R loss each. So it would be -1, -2R. But then compare that to the trade yesterday, which, as we've seen, at the very least should have been plus 3.5R, which would have been more than made up for these 2 losing trades, or ideally down here plus 8R, again, which would have been much, much greater than the losses. So this is what successful trading is all about, or what professional traders try to do, is that they try to keep the losses small. So when the losses come through, they're kept small, and try to run their trades. So when they have trades, their profits are large, but not just large in cash terms, but large in relation to the initial risk. So in this case, this profit would have been a plus 8R, and so far today we've had 2 losing trades, -1, -2R loss. So that's what we try to do at MTPredictor, and what I suggest you do is wait till the pattern's clear, which only will be half the time. Look to use your higher time frame support and resistance DP zones on the higher time frame chart. Look to gauge your trades in the direction of the larger trend based on those higher time frame support and resistance zones, and then ideally over time look to have trades where the profits are large and the losses are kept small. But no matter which way you look at it, you will have losing trades, but keep those losses small and the profits large. That's what professional traders aim to do over time, and that's what MTPredictor is designed to do.